equity. Sunil Singhania, founder at Abakkus Asset Management, join us on the show. Hi, Sunil. Good morning. Good to see you win. What a moment, right? Out of nowhere, this deal has been announced. Do you think this is the moment that the bulls were waiting for? Time for India to give up the underperformance and maybe outperform the globe?
Good morning after a long time, at least for the markets. I agree, Nigel. I think the markets was lacking a catalyst, and this certainly comes as a catalyst. In fact, I jokingly say that people had just stopped even talking about stocks. It was all about gold, silver, and I have never seen, phones not ringing after a budget the way this time it was quiet because, no one was just interested in knowing what to buy. So I think this comes as a very pleasant surprise. It helps I would say the mood, which was the most important. It definitely helps the economy, the corporate profit growth, and hopefully the currency should also respond. So I think all in all, the positioning is light. FIs have been short, has been seen by the futures, open interest. Position on the domestic side, at least on the speculative side, is low. And expectations after the budget fall were also very low. So this definitely comes as a big catalyst.
If you are deploying money, Sunil, good morning, and as they say, right, Derai Durustai. So where will you focus your energies on? There may be relief. A 4% gap up will show everywhere. There'll be relief across sectors. But where will kind of you focus on if you had fresh money? I mean, I think most people are already invested, but fresh allocations, where will you focus on?
So I don't think sector-wise anything dramatically changes. Obviously, there are some smaller sectors like textiles and, which are direct beneficiaries, but those are small sectors in an overall market cap perspective. I think the first thing which will happen is obviously, there will be a nifty trade because if you have to put in big money, it's only going to be in the larger companies. The smaller companies might end up 5-10% higher without volume. So it is futile to start looking at some smaller companies, at least today. So I think the first trade is obviously going to be large, liquid, nifty names. But one good thing, Prashant, about this is, and I hope this sustains in the form it has been announced, because that is also always a gray point with the President Trump, is that the uncertainty which was holding back purchases of Indian goods by the US will go. So we'll have a double catalyst. The inventory levels at the US buyers' end are very low. Everyone was just buying what was absolutely necessary. And this might also trigger some advance, or I would say some inventory buildup also. So maybe the next 1-2 quarters, you might in fact have a big boost in terms of exports to the US. So I think some engineering companies should benefit. Textiles, obvious names, but I would say that this whole sentiment really helps us. And one thing which we also not have to forget is that now, if this 18% is the way it is, we are at significant discount in terms of tariff to our competing countries. In fact, even lower than Bangladesh, Vietnam, China, of course. And that would also be a catalyst for some of the sectors which traditionally had competition from some of these countries.
You said large liquid names is where Nifty, right? Where it'll show up first. Today, perhaps not the day for smaller, this or that smaller single stocks in that sense. Where IT services, Sunil, there's no direct correlation for IT services. It's a large champion export sector for India. Financials is the other one where there is perhaps headroom and it's always been a favorite for foreigners, etc. So just view on those two?
No, IT services, in fact, they had some benefit out of currency depreciation. I think that should negate to a certain extent. But IT services anyway did not have tariff. So I don't think it's a tariff trade. In fact, there would be a trade where people would want to move out from some of these names which had not fallen to some of them which had fallen a lot. Financial services have been very stable. I think it will be neutral for them. There might be some little bit of inch up in terms of credit growth because of sectors which are exposed to exports.
No, Sunil, my question is not the real impact, but the sentiment trade. Where does it show up?
Sentiment trade, if Nifty goes up, obviously, 35-40% is financials. So financials have to participate very clearly.
Okay. Sunil, one final question. You know, when Prashant was chatting with Madhu last night, he was talking about how the change in the buyback rules, which were announced in the budget, could actually be a big catalyst for many of the mid and small caps, which have underperformed greatly. Your view on that? And do you think mid and small caps, today, of course, when money flows in, it goes into the large caps, they will do well. But mid and small caps, if you want to allocate money via SIPs or lump sums into mutual funds, would you look at mid and small cap?
No, we are incrementally very positive on small cap. In fact, we would be coming out with our Abakkus small cap fund also on the mutual fund side very, very soon. On the buyback, I think it's a very big positive. Though, promoters' buyback will be taxed at a higher level, but from a non-promoter perspective, I think now it's equivalent to the capital gains tax. So there will be a lot of companies where promoters don't want to participate, where they feel the value of the stock is not reflecting the true fundamentals. Instead of giving dividend, they might resort to buybacks. And I would say that you will start to see announcements very, very soon, because buybacks completed after 1st April are eligible. So the announcements will start, I would say, as soon as this month itself. We definitely expect a significant amount, being sucked out of the market by way of buybacks, and a lot of companies using this as a tool.
Okay, all right, Sunil, always a pleasure hearing you out. Thanks a lot for joining in. The last time around as well we spoke, you were saying that you're optimistic and this market is presenting an opportunity. Good times for the market, and I believe personally as well, there's a wedding in the family. So best wishes to you and the entire family. February is going to be a rock star of a month. Thanks for joining in.
Thanks a lot.
Well, let's welcome Harish Krishnan, CIO Equity at Aditya Birla Sun Life AMC, who joins us. Hi, Harish. We spoke a few days ago, and you were telling us this market is providing an opportunity. You sounded extremely bullish. What do you make of this big landmark deal?
Good morning, Nigel. So yes, I think it is important to take the enormity of what has happened in the last 18 months or so, because it's been like, if you look at equity markets, it's been on a smooth mode for now almost 18 months, even at the headline Nifty level. Of course, there is a carnage below that. But in these 18 months, what have we really accomplished? We've kind of done a trade deal with almost 70% of the world economic activity. With the remainder, which is primarily China, we've become even more cooperative and collaborative in terms of trade. The second key aspect was a rating upgrade that India got, which would ideally have got a lower cost of capital. Thirdly, when there was pressure on the export channel, the domestic consumption market opened up with respect to the GST and the direct tax cuts. Now, all of these have meant that, Indian corporates, possibly any which case, had very good balance sheets, where we're throwing in a plenty of cash flow. Today, if you were to look at it, if you were a corporate CEO, this would possibly be the moment for you to really, start investing massively as far as, your own company fundamentals and financials go. And therefore, from an enormity of this, I think it is massive. Yes, for sure, from a trading point of view, there is definitely a positioning aspect, and the fact that we've underperformed. I think all of that can potentially reverse very, very quickly, as we'll see possibly by even the end of the day. But let me also frame it in a slightly different way. India's share of world economic activity, which is world GDP, is today close to about 4%. We do think that over the course of the next decade, this is likely to move anywhere between 7 to 8%. And this is just mathematics speaking out, right? India's share of world market cap is today at 3.4%. I do think that, from 3.4, we would be looking at anywhere between 7-8% over the course of the next decade. So that is like a massive, massive amount of potential of wealth to be created in a country like India. The good thing, of course, is that, domestic investors, including us, have been very, very counter-cyclical. Even as foreigners have kept selling out a lot of their equities, we've kind of kept buying in. And as you rightly recalled, we did see a lot of opportunity in terms of lower valuations. And today we will see foreigners turning very, very pro-cyclical and kind of coming back in. So therefore, all in all, I think it's a great morning. But I think it is also a start of something, terrific to come through.
Harish, on FPIs, right? Do you think they will, good morning, do you think they will make up for all that stock sale because they've sold, it's been discretionary decision. They've actually actively diversified away from India. They've sold because of whatever, high valuation, this was a sentiment negative and other kind of factors, etc. as well. Do you think they come back in a durable way?
I do think so, that they will come back in a very big way. The only thing that was hurting was the currency trade. I don't think that their appreciation of Indian macro has changed quite dramatically. Their appreciation of Indian companies has changed dramatically. The only issue was valuations, and valuations have also kind of cooled off, especially in the larger 100-odd names. Of course, at the mid and small cap, one can still quibble. Even there has been a reasonable amount of correction and froth letting out. But the bigger issue for them had been the consistent or persistent slide in the currency, and which that I would imagine, it's kind of reversed. And therefore, I do think that is going to come through in a reasonably stable way. The only caveat to this, Prashant, is that, unfortunately for markets, the supply has been relentless. And so I think under 5-7% up, we'll again start seeing a whole spate of issuances, be it IPOs, be it private equity sale, etc. And a lot of these supplies invariably are going to get absorbed by foreigners as well as certain domestic participants. But so therefore, the full impact of that change and stance probably will take some time for the markets to come through.
Okay. All right, Harish. Good speaking to you, Harish. The last 6 months or so, we have spoken numerous times, and you have been telling me, Nigel, it's time for the Nifty to outperform gold. And we spoke on Friday, and later that evening, we knew what happened. So it seems that's going to play out. Harish, thanks a lot for joining in, giving us your view. We look forward to chat up and have a rocking day ahead.
Same to you. Thank you.